Hey everyone, this is Madeline Friddle with the Empowered PCS, and today we're bringing you some of our customers' favorite lenders who work with us through the VA loan and just trying to introduce what the VA loan is, how it benefits you, and how to use it. So my preferred lender is Tyler Tatum. Give us a wave, Tyler. There we go.
You're breaking up a little bit.
Uh-oh. Sorry about that.
You're back.
Oh.
Okay. And Melinda Cruzzi DePerna here in San Diego. And my client's preferred lender, my preferred lender is John Schuler with Guaranteed Rate.
Hello.
And he'll be chatting with you today.
And I'm Christina Zimmerman over in Whidbey Island, Washington, and I've invited Jaleel Vester with Summit Funding to join us. He's awesome, so can't wait to talk to him more about the VA loan.
So I think, Jaleel, you had some of those intro ideas about the VA loan. If you'll kick us off with what it is.
Of course. Thank you, Madeline. So I decided to pull up a little article, and I thought the catch was just awesome, so I'll read it as far as what a VA loan is. So the VA loan program, it was created in 1944, and it's a part of the original Servicemen's Readjustment Act, better known as the GI Bill of Rights. President Franklin D. Roosevelt signed it into law June 22nd of 1944. And essentially, it's just created to level the playing field. We had a lot of military veterans out at war, and they weren't making crazy money like people that were here in the States. So the government decided to give them a hand, and the VA program, I mean, it's gone through a lot of adjustments over the years, but it's still going strong here today. And now a lot of our veterans and other armed forces heroes can use it.
Nice. I know, Tyler, we talked a little bit about what you need to use the VA loan. I send a lot of my customers to you because it's good, easy work at Bank of England. But tell me, what do they need? What do they have to be to get a VA loan? What do they need? What is that?
Yeah, absolutely. So every client is different, but typically what we're doing in the lending world is evaluating the income, assets, and credit for every borrower we work with. The VA loan program has actually drastically lowered the barrier of entry for veterans and active duty service members to purchase a home, and rightfully so. So they allow for lower credit scores, higher debt to income ratios, and reduced documentation required to get the loan done. Typically what we ask for here on my team at Bank of England is for a copy of the most recent LES if they're active duty, or we get a copy of their DD-214 to verify their benefits are available to them for the VA loan. In addition to that, we want to see a copy, if they're not active duty, we want to see a copy of their most recent pay stub with their current employer, and or a copy of their most recent year's tax returns to verify that income.
Okay, so seems pretty straightforward. You're active or you're not. There's a piece of paper you have that tells us that you can get the loan, right? So let's see, John, I'm blanking on what you were supposed to talk about, but tell us what you're supposed to talk about.
Well, different items. So with the VA, while you're active duty and you want to use your VA home loan benefit, the VA charges different funding fees for different borrowers. So the first time that a veteran or an active duty service member wants to use their VA home loan benefit, they're going to pay a 2.3% VA funding fee, and that gets financed into the loan amount. Now, every time that you use that again, because you can use your VA benefit over and over, it can go up to 3.6%. Even though VA does not require you, the veteran or the active duty member, to put a down payment down on the home, if you choose to, then your VA funding fee can be reduced a little bit down to 1.5%, like that. Now that have exited the military and they're now qualified or collecting VA disability benefits, that VA funding fee can be waived. So it's just another benefit that VA works in for different service members. And it's a really, really competitive program. So.
Yeah, and you even mentioned, some people think you can only use the VA loan once. There is like an entitlement limit, but what, I don't think it was Jaleel. What if you've already used it once?
Yep. So once you've used the VA loan one time, essentially you've used your entitlement, but you can use it again. You can use it again after you've either sold your home or refinanced out of the VA loan into a non-VA loan that could be conventional or what have it. And then you can use the VA loan again in a new location. So example, if you're with one of my friends here in NAS Jax and you purchased a home with one of these lovely realtors and you're now saying, oh, about to get orders up to NAS Whidbey Island up here with Christina Zimmerman. So now you're going to sell your home that you purchased in Jacksonville. Your VA entitlement is now freed up, and now Christina can find you a home up here in NAS Whidbey Island, and you can use the VA loan again, no money down.
Jaleel, a question on that. So sometimes we have people coming from places that are less expensive, and they may not have used all of their entitlement. Can you speak to that a little bit?
Yes, and give me a second here because I had some notes on that. Essentially, what it boils down to is the VA has a certain amount of entitlement that you can use. I believe it's 36,000 times 4. And if you're in a area where the home prices are lower, so you're not probably in California because California hard to get a house out there. But if you can, great, good for you. But say you're in rural Mississippi and you found a home for $20,000 and you've got some space, you've got some wiggle room. You can use the VA loan again for down payment on that home out there in Mississippi.
Yeah, and we all know we've, as agents that work with a lot of VA buyers, we've worked with some of the big box lenders. But Tyler, tell us, how do you go about choosing a lender? What is that like?
Yeah, I mean, I've done this for quite a while now, and a lot of lenders learn things through trial and error. One of the things you want to know before choosing to go with a lender is how long they've been doing it. What's their experience with closing VA loans? They do have their own intricacies, so we're fortunate enough that we do have VA underwriters here in-house. I can go directly to the decision maker, call them on their cell phone anytime we have a scenario question, and we can get out in front of any potential issues before they arise later on in the process. So you want to make sure that you're using a lender that is familiar with the VA loan program. You want to make sure that you're using a lender that is asking for additional documentation. There are areas that you can go on the internet where you can plug in how much money you make and what you think your credit score is, and it'll give you a pre-qualification letter that is not really worth the paper you printed it on. So you want to make sure your lender is asking questions, diving a little bit deeper into that income, assets, and credit that we discussed earlier, to make sure that you do, in fact, qualify for the loan prior to going under contract. One of the final things that we do prior to issuing our pre-approval letter as well is making sure we run it through our automated underwriting system. So we've already got a verification, and we've got a full checklist of all items that will be needed from beginning to end on the loan.
And just to clarify, I think when I first bought my first house, and my husband's in the Navy, so we used a VA loan, I thought only the big box lenders were the ones that did VA loans. It took a conversation to realize that, and becoming a realtor to learn that. But, we're not going to put you guys on the spot with interest rates, because reality is someone's going to watch this video in a month and they're going to be completely different. So it's not even worth the conversation. But the reality is y'all
or a week.
Right. Or tomorrow, you never know. But y'all do the same thing that big box lenders do. You can achieve the same interest rates. It's about, having a relationship, right? I mean, it's 30, 45 days of concentrated relationship.
I think
yeah, absolutely
important to mention, sorry, Jaleel, that how nimble they are too. That relationship isn't about who's our friend. Responds to get some pre-approval letter on Saturday at 5 o'clock. John Schuler responds, he's earned my client's business. It's about we have been really competitive here in San Diego. And we were able for a period to close VA loans in 21 days. I don't want to promise we can do that right now, but you need to be able to have a relationship with your lender to say, my agent, or the agent to talk to, my agent's about to put in an offer for 30 days. Can you close? Because if they can't close, it could cost you money.
Right.
Yeah, that is true. Yeah, that is true. The big box banks, you guys, they sometimes are not as nimble as what Melinda said, and typically they won't focus on the purchase contract deadlines. They'll just focus on what their capabilities are. So mortgage lenders like Jaleel and we work for just mortgage companies, we can work a lot faster, within the timeframes to make sure that we meet the guidelines for you guys. So,
and if I can even add to that, John, I would also say that mortgage lenders, we can close on time with high communication and on budget. We know you. We know your family. We know your family's goals. We know what you're trying to do right now, but we also know your long-term plan for the future. So we care, we understand. And so because you can put your hands around my neck, I'm a physical person. You can't say that about everybody on the internet.
Let's not invite that kind of activity.
no, I know.
I got probably a little too
What I
dark,
love
too quick,
about
but
that,
just saying.
what I love about that though is, like you're saying, Jaleel, after the transaction is over, as life changes and people get ready to PCS, they might want to keep it as an investment property or do other things with it. They can call you and talk to you about those things. If they call a big box lender, they're not going to remember who that person was. It's your number to them. So to have that relationship long term and to be able to call you anytime, I think is amazing.
100%.
Yeah.
And you actually mentioned investment properties just then. So let's dive into that. Once again, John, was that you?
That was me. Yeah. So let's talk about investment properties. So VA, when you want to use your VA home loan benefit, VA has it designed just for your primary residence. So you cannot buy a house with a VA loan as a second home or an investment property. But if you already bought a home with a VA loan, like Jaleel mentioned earlier, or maybe it was Tyler, you can refinance that existing VA home loan into a conventional loan, retain that property as an investment, get a one-time restoration, and then go free up your VA entitlement and then go use it again. If there's not enough entitlement, you can go use it again to buy your new primary residence. So, and then the cool thing with VA too is once you've got a VA loan on a property, the process of refinancing that, it's called a streamlined refinance, or some people call it an EARL. What happens is when you want to do a rate reduction on your existing VA home loan, there's no appraisal, there's no income documents. It's just a real quick, easy process. So there's so many benefits for people to use their VA home loan benefit.
Isn't there the option also, I know the answer to it, but a multifamily, when you owner occupied, especially, we don't do it a lot in San Diego because our price tag is higher, but I would presume Whidbey and Jacksonville, there's opportunities maybe to own a duplex or a fourplex as a active duty military or as a veteran, and you live in one. You guys want to adjust that?
Correct. Yeah, absolutely. We've seen that here. We do have our price points here are a little more favorable to accomplish that goal. So if you do qualify for VA loan benefits, and you also have the knack or the interest in getting involved in investing in real estate, you can purchase a multifamily property anywhere from 2 to 4 units. And as long as you live in one of those units, you can consider that your primary residence. You can generate income on the other 3 units if it were a fourplex. And it's an awesome way to get started in real estate. And it's really, if I'm not mistaken, I think that's the most economical way to get started in investing in real estate from all the loan programs that are offered to investors out there.
Yeah, and Tyler, you actually just mentioned a loan program. We're going to shout out Florida here for a second. You just give a few seconds on the Salute Our Soldiers.
Yeah, I was going to say it kind of ties into how to choose a lender and why to go down the path of a VA loan, some different benefits that might not immediately be evident. But make sure your lender that you're working with offers all programs available in your regional or your geographical location. Here in the state of Florida, we have a program called Salute Our Soldiers that we actually, the state of Florida just came out with as of March 1st, and it's absolutely amazing. It allows you to do the 0% down on the VA loan, but it also has closing cost assistance as well, either deferred closing cost assistance or forgiven closing cost assistance. And there's different little caveats for each of those, but they do have a program within that if you purchase a home here in Jacksonville or anywhere in Florida using that program and you receive orders elsewhere, you do not have to pay back the closing cost assistance. The program, the interest rates are streamlined throughout the state of Florida. As of today, it's 2.75% on a 30-year VA, and that's not different lender. Whoever's offering that program, it's set through the state of Florida. So there's great options out there over and above just the standard VA loan benefit. So make sure that your lender does offer all programs available in your area.
That's awesome.
And that's definitely a question to ask, if you're interviewing lenders, which as an agent, I will suggest Tyler, but I will also suggest another, because who you as a buyer choose as your lender is totally your call. Granted, I have a great relationship with Tyler where I can text him, and I'm sure it's the same with the other ladies in this call, that I can text him and say, hey, what's going on with this loan? And he'll give me a call and we'll answer it. I don't quite get that with other lenders. So I prefer to work with him. But if you as a buyer want to work with someone else, it's totally your business where your money goes. It has nothing to do with us. We're just here to help you get the house.
I don't think we've addressed it, Madeline. I think what's up next is like those special circumstances. So if you get divorced, or we haven't done a lot of assumable loans because we've been in a low interest rate environment, but some of those special circumstances, I think, John, you were going to address that. The other guys, of course, can always pipe in.
Sure. So with a divorce, right? If you buy a house with your spouse, you do a VA home loan, and then let's say unfortunately you have to go through a divorce. The court awards the spouse who is not a veteran, not eligible for the VA financing, and now your VA home loan is tied up on that house. That could affect your eligibility on what you can buy moving forward. So again, you only have a certain amount of VA entitlement out there once you already have a VA loan. So you'll have to see what the entitlement is available for you to move forward and buy another house with the VA loan. And there's a formula for that. Or you can free it up if they are able to refinance it, right? So if you have to go through a divorce, your VA home loan benefits tied up on the house that your spouse is living in right now. If the court says that they've got to refinance, follow up with that. Make sure they actually do refinance that property into their name so that it frees up your entitlement so that you can go buy a house with your benefit. As far as assumption, Melinda's right on. There really hasn't been a need for people to assume a veteran's home loan because rates are so low, you can get your own rate. But the way an assumption works is this. Any VA loan is assumable. You do not have to be a veteran to actually assume somebody's VA loan that's on a house if you want to buy their house and the underlying loan's a VA loan. But you cannot come to a lender like us. You must deal with the current loan servicer. That's the company that's currently holding that VA loan and collecting the payments on that VA loan. And you, the consumer, would go directly to that loan servicer and qualify. And you basically cut out regular conventional lenders like us because we don't hold that VA loan right now. But usually the only benefit to assuming a VA home loan is because the rate on that VA home loan is much lower than what the current market is. And it's flip-flop right now. We're seeing the lowest market ever. Yeah. So there's no need to do that, but it's an option.
I think that the takeaway on both of those, of course, I'm a real estate agent, so that's always my takeaway, is you should consult a real estate agent if you're getting divorced, because there are things you won't think of. There's whole books written now on real estate and divorce, and that your attorney may not be familiar with that, and your tax guy, they're not looking at your taxes, they're looking at the divorce. So, if you have that unfortunate circumstance, same thing, even with death, on how things are transferred, talk to us. If when the environment changes and we're in a buyer's market and rising interest rates, well, then just know that may be a tool if you're trying to sell your home because you've been PCS, that your loan may be assumable. It may be a tool to help get your house sold.
I have two things I just wanted to ask you guys because I think they're important and I come across it a lot. One, what kills a loan? So while you're in the process of buying a home with a VA loan, what things should you not do? And then the other question is, if you're moving across state lines and your spouse is included on the loan, whether their job transfers or doesn't transfer, how does that affect the loan?
Well, I'll speak to what you don't do.
Oh, go ahead.
You don't acquire new debt. You don't go buy a car. You don't go finance some more furniture early. okay? Like, talk to your lender. What you don't do is just do stuff that's going to affect your credit. If it's going to make it to your credit report, talk to your lender first and at least consult with them. I mean, maybe your debt to income ratio may allow for you to get a little bit more credit, but ultimately it's just red flags. High communication when it comes to purchasing anything new when you're trying to get a home. And that even goes to after closing. Like, you just talk to your lender before you buy anything if you're considering getting a home. Like,
So
it's a
Jaleel,
big
you can't just buy a couch like the week you're closing on the house just so that it's ready for closing day?
No, you cannot. Because your debt to income ratio is going to get screwed, and then you're going to be, you're going to have this beautiful couch and you're going to sleep on it on the road. Because you won't make any.
So Jaleel, let's say I got my tax return and I got a few $1,000s back. Should I be paying off some random debt without talking to you first?
No, you should not, Melinda. You should call me first. Congrats on the tax return. Call me first and we can talk about it. And honestly, if you just throw that into a savings account, that'd probably be the best thing budget-wise, but we won't get into that. Anyways, talk to your lender before you do anything crazy. Like, that's just bottom line. Deal Saver is literally just picking up the phone, because we will answer the phone, especially if you want to talk about buying new furniture. So that's my piece on that.
Got it.
And so what about the moving with a spouse on the loan and how that all changes?
I could take that one. So trailing spouse income, if the spouse is moving with the veteran, if they've got a job lined up and we've got a job offer letter, absolutely we can use that income moving forward, as long as they just show up and actually report in prior to closing of the loan. Now, as far as trailing spouse income, if the spouse wanted to stay back, let's say you're going from North Carolina to San Diego, husband and the kids, or maybe just the husband's going to come out to San Diego, the wife's going to stay back there because her profession needs her. We can certainly use her income. Now, trailing spouse income is a case-by-case basis. If the trailing spouse's profession and income is such that we can prove the demand and that there's not going to be any problem with them gaining employment at the new duty station that they PCS, we can count that income into the mix, whether it's counted as effective income or income just to offset, certain debts for a 10 to 24 month period of time. So there's no blanket yes on trailing spouse income, but absolutely we can use it under the right circumstances.
One point to add would be getting a letter from the HR department of the job that your spouse is going to be going into is most helpful. If you can track it and prove that you're going to continue to get paid in the new location of your primary residence, that often helps us use that income for your qualification needs. So letters from HR confirming that you're still going to get paid in the new area is most helpful in that. That was all I was throwing there. You did a great job just explaining that, John. Awesome.
Thanks, Jaleel. Yeah.
And I was just going to touch base on one other thing not to do, because it should go without saying, but it doesn't. The biggest thing I'd say not to do if I were a home buyer is to keep any secrets. Oftentimes in our industry, people think that the lender may not find out about something. I can guarantee you, John, Jaleel, and myself have ways of finding out all the information we need to make sure that each of our borrowers is eligible for financing. And there's nothing out there that will slip through the cracks. We will find out about it. So have an open, honest conversation, just as you would with any other relationships that you have with people. Let us know the good, the bad, the ugly. We work for more nimble lenders, so we can address that up front and make sure you don't have issues on the back end.
That's awesome.
Exactly.
Okay. I think we've covered all our topics. I know we were a little bit choppy here. I appreciate everybody working with us on that. So again, closing up, these are lenders that we can connect you with. Just any questions about the VA loan, and they also do other loans, but we're here on a military show. So closing out, we are your boots on the ground for San Diego, for Jacksonville, for Whidbey Island, and I don't know if we mentioned it this time, and for Pensacola, Florida. So thank you for joining us today, and we will see you next week.
Thanks.